Hi everyone, today let's talk about the Chinese economy, as well as Japan. Then we'll touch on the ruble hitting a 17-month low. Then we'll get into the economic data. Then we'll take a look at the charts. And then we'll finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So China, the second largest economy in the world, is starting to falter, and they've decided to stop releasing youth unemployment numbers. And typically this is because they are very bad and they don't want to tell the world about how bad they are doing. And this, of course, is very concerning because a lot of the positivity in the markets is based on a strong reopening from China and strong manufacturing demand from the United States. And that symbiosis between the two economies typically drives economic growth. Retail sales for them grew by 2.5%, well below the expectations for a 4.5% increase. Industrials only at 3.7%, below the 4.4% expectation. So they are growing, but not doing great, and unemployment in the urban areas ticked up to 5.3%. And this is starting to pop the bubble of a positive reopening in China, driving economic growth around the world. If they're not meeting growth targets, that could be an indicator that the rest of the world will be soon to follow. Japan, on the other hand, who is the third largest economy in the world, blew out expectations, growing by 1.5% versus a 0.8% expectation. And you can see that here, third largest economy growing 3.1%, so slower than China, but way better than expectations from Japan, so this could potentially offset some of the Chinese weakness. And this is definitely interesting to me considering that they just raised rates for the first time in a very long time. I guess technically they didn't raise rates, but they're allowing rates to go a little bit higher, up to that 1% area. They have been very low for a long time in Japan, but it does make a little bit more sense now that their economy is growing a little bit faster than expectations and that they're allowing rates to go a little bit higher. And they do mention that here, loosening their hold on the yield curve, allowing the 10-year yield to go a little bit higher, up to around that 1% expectation. And then moving over to the ruble is tanking versus the dollar, down around a 17-month low. It's down 30% on the year versus the dollar. Obviously, a lot of this is because of the sanctions, and their economy is very heavily based on oil and mineral exports, which are not happening the same way that they were before because of the sanctions. So a weaker economy, weaker partnerships. Their economy is growing a little bit, and it's not doing as terrible as expected, in my opinion. And you can see that here, GDP is expected to grow by 4.9% on a year-over-year basis in second quarter, which is a rebound from the 1.8% contraction in first quarter. So overall, not bad. But that does not mean that people want to do trade in rubles or that they want to hold rubles, and demand for rubles are definitely going lower. Moving over to the economic calendar, retail sales came out very strong. The American consumer is still quite strong. I think this was shaded on by the Chinese economic data that came out today. Definitely was not great. So between those two, we were basically flat on the day. Moving over to tomorrow, we have GDP for the Eurozone. That'll be interesting at 5 o'clock in the morning Eastern. We also have building permits here at 8:30. And then remember, tomorrow afternoon, FOMC minutes at 2 o'clock in the afternoon. Moving over to earnings just for a moment, we had Home Depot today beating on both the top and bottom lines. We also had Agilent beating on the top and bottom lines. And then for tomorrow, we don't have much, but there is Cisco, TJX, fairly interesting, as well as Target. Moving over to Max Payne for the Friday expiration, you can see the amount of options went up by quite a lot, up to 4.3 million options now. And this landscape has changed a lot. So top call wall here at 455, that's interesting. And there are tons and tons of puts throughout the market. Highest put wall here at 430, that's the lowest I would expect to go for the week. 445 also fairly interesting. Certainly could see a close above that level for the end of the week. But remember, Max Payne is still at 440 right here at this level. So we're between those right now, 440 to 445, and a close right here around the 441 area. Very close to where we are right now. Does make sense. Moving over to the charts, starting off with the S&Ps here on the hour and the 4 hour. You can see the hourly moved lower during the pre-market, hit that level, chopped in the zone for a long time, and then on the last candle of the day, we broke down pretty heavily. You can see we were testing that 200 SMA on the 4-hour chart. We did end up closing below it, so that's quite weak. We've been watching this trend line. You could certainly see a position where you come into that area around 441, find some support, and then chop in this zone between 439.98 or 440-ish and up to 445 seems like the area that we're going to chop going into the end of the week. I would be pretty surprised if we got below here and did not rally into the end of the week, again finishing in this zone for that max pain expiration, but everything is still bearish here below all of the EMAs and SMAs, and they are in order now on the 1-hour chart. Got the 9, 21, 55, 144, and the 200, everything looking bearish here on the S&Ps. Moving over to the NASDAQ on the hour and the 4-hour, looks quite a bit different. We did not make a new low today. At the end of the session, we were showing a lot of weakness, but that was still above the previous low from yesterday and the day before. So we're still in this zone between 364.84 up to 367.63. We did show a little bit of strength at the end of the session, but at this point it's been fairly consistent. We rally into the after hours, gap down into the pre-market, fall throughout the session, rinse and repeat. We've seen that quite a few times at this point. So it wouldn't surprise me if we saw a little strength, maybe in the pre-market, fell into the session, something like that. I wouldn't take this strength too seriously. And jumping up to the hourly here, you can see we're almost in order. We got the 9, 55, and 21, so those are flipped right now. Then you got the 144 sitting all the way up there. Overall, it doesn't look super bearish because we are still holding above these previous lows. Could be setting up for a higher low setup. Definitely can trade off that 364 area. But again, based on max pain, I wouldn't expect this is going to rally super aggressively. I still think rallies are going to be met with sellers. Moving over to the Russell and the Dow, the Russell is no longer holding up the same way that it has been. It's now downtrending effectively. We took out these trend levels, looking much, much weaker. Dow similarly breaking down, did not hold this level. Now you got the 144 sitting down at 348. That's an interesting level. 347.67 just below that, but everything is trending down pretty consistently at this point. Moving over to the equal weighted S&Ps just for a moment, you can see we hit that 55 EMA on the daily chart. Touched that level and basically held there almost to the penny. Momentum bearish, RSI still bearish, but an interesting level. Would not surprise me if we rallied a little bit off of this level, retesting this 21 EMA before getting a continuation lower. Otherwise, if it breaks down immediately, 146.74 seems like an interesting level here at that 144 EMA. But definitely looks weak, especially with today's candle. Moving over to Apple and Tesla. Apple still holding in the zone, sold off today, so that rally yesterday was not much. We kind of expected that, still holding right on this level. 176.15 is the level I'd be watching for a bullish trade. Again, it could cut through that level just like butter, move down to 170.90, so if you're going to trade bullishly, definitely have some tight stops. Tesla falling through the floor. Hit that price target, broke it immediately, falling after hours here. Below that, my next level is down at 214. That would be interesting. You can see it rallied right through this area last time. Had a short pause around 223. That would be interesting. But right now, this looks weak, and it looks like it's accelerating in my opinion. Moving over to staples and discretionary. Staples broke down massively, hit the trend line, touched it just for a moment, stayed in that area. So now if this holds, you could definitely trade off that level that's very close to these previous lows here. But if this breaks, then I'd be looking for 72.50, which would be about another $1 of downside here on staples. Discretionary, selling off throughout the day, just like Tesla. Took out all of these closes, so this is a new low close here recently. Still got the 200 SMA sitting at 167.20, and then my price target at 166.78. Moving over to transports on the hour and the daily, continues to sell off, hit my level at 251.77, sold off right through that level. You can see that here, closed below it, closed on the lows on the daily chart. Momentum on RSI, super bearish. Looking at that 55 EMA now for potential support at 248.38, and that's really the soonest I would expect it to pause, so about another $3 or so of downside before we could find some potential support. Moving over to breadth on the 50 and the 200, you can see big bearish candles on both charts, getting very close to this trend line that I've been watching. Just below that, I have the 40 level, which marks a lot of lows here. Definitely interesting. We did hit oversold conditions here on the 50-day average, which is interesting as well. Certainly could see another big wick lower and then start to see a little bit of a bounce. Remember, nothing in the market goes in a straight line, so we're going to see a bounce at some point. So far, it's been a falling knife, except for this one day here on 7 August. We also have the 200 SMA now on the 200 chart at 54.86. We're at that level now. Again, does seem likely that we're going to see a little bit of a bounce at some point in the shorter term. Might see 1 or 2 more days of bigger downward price action and then see a final rally. Again, looking for that max pain finish. Moving over to the dollar on the 4-hour and the daily, you can see we continue to chop in this zone. We've been here for 2 days now, right at this resistance. So I added this rising triangle type structure. I don't know if that's how it's going to finish out, but it is very interesting that we kind of look like a rising triangle, rising wedge, and now we're at that 200 on the daily chart, which is obviously a very powerful level. We've rallied aggressively into that zone, and it would not surprise me if we kind of reject from here, move down, gather a little bit of supply, and then start to rally through that zone. Usually the first test of these larger EMAs and SMAs is not successful. So you test it one time, pull back, find some buyers, then you rally through that level one more time, and that's usually the more successful attempt. And if this does break down here pretty heavily, that could contribute to the retracement to the upside in equities. Definitely something I'm watching very closely here at this 200 on the daily chart. Moving over to TLT and JNK. JNK falling here today. So we got breadth decreasing. You have all the major ETFs moving lower, and you have TLT moving lower. Seems like a market-wide sell-off is starting to take place, which are generally the most dangerous type. When everything is selling off, that's usually when we see the larger drawdowns. So be careful out there. Definitely interesting to see how everything is moving lower, except for the dollar. Moving over to the volatility indices, we got a slight move higher on the MOVE index, still below this trend line. On the VIX, however, once again, this trend line held, so we did not break below it. We got another leg up, engulfed the previous candle. If we get another build on that candle, that could be quite interesting, potentially pushing up to that 1850, up to that 20 level. That would be pretty interesting. At least a retest of the 144. That's up at 1754, so that would be a pretty substantial move higher on the VIX. Again, indicating some potential lower prices to come on the major indices, so definitely keep this in mind. Looks like a pretty bullish finish in my opinion. Moving over to my accounts, I did not do terrible given the market performance. But of course, it's not great when everything is going down. So I was down about 0.5% overall on my accounts, maybe a little bit more than 0.5%. IWM down more than 1%. Q's also down more than 1%. So did outperform, but of course, it's not great when you lose money. I still have those 200 shares. I'm not sure why I ended up holding on to those, but I sold calls against it all day, and that protected me quite a lot. I still have some 366 calls for tomorrow for $1.84. So that protects me down to below my support around that 365 area. That still gives me about another $1.40 of potential upside on these shares, and that's on each set of these covered calls. So that's around $300 of potential profit. If we get executed on those calls, that would be interesting. Otherwise, I still have some 369 calls a little bit further out, not trying to get executed on that, just to give myself a little bit more protection because everything does look pretty bearish. I continue to roll out these puts that I have down to 365 for 2 days out, and that's for $1.35 credit as well. So effectively buying the stock down at 363.70, which is about another 1% lower. I'll probably roll these out again tomorrow, roll them down one more time out to 364. I can probably do that for a little bit of a credit. We'll see what the market is doing tomorrow, but right now we're about flat after hours, and I am trying to get out of these shares and start to play a little bit less aggressive to the bullish side. Let me know down in the comment section what you think of China, Japan, or Russia, or even the retail sales, which were a little bit better than expectations. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.